Welcome to the Wealth Secrets channel. Are you worried about the potential for inflation and its impact on your finances? Do you want to learn how to protect your money and keep your wealth safe during economic uncertainty? Look no further. Throughout this video, you are expected to know three things. Number one, what does inflation mean? Number two, why does inflation matter and why it is so high? Number three, how to protect your money during inflation. So keep watching this video until the end so that you won't miss any key points that is beneficial to you. Number one, what does inflation mean? Inflation is when the overall price level of the value of goods and services in an economy rises over time. This means that your purchasing power decreases as time goes on. Number two, why does inflation matter and why it is so high? Inflation is a universal price increase of goods and services, which reduces the value of money over time. This is why it's essential to protect the money during inflation. The effects of inflation are broad-reaching and can be felt across the economy. When prices increase faster than wages, you may find that inflation erodes your purchasing power and decreases your quality of life. If you want to protect your money during inflation, you need to take specific steps. In short, inflation is a powerful economic force that has wide-reaching implications for your money. Therefore, it's essential to understand how it works and how you can protect your wealth during times of rising prices. Number three, how to protect your money during inflation. Here are 5 tips that can help protect your money during inflation. Before we dive deep into it, hit the subscribe button and I'm about to share a bonus with you at the end. So stay tuned. Number one, invest in assets that tend to appreciate during periods of inflation. Investing in assets that tend to appreciate amid inflation is one of the best methods to accomplish this. Real estate is a classic example of an asset that can help protect you from inflation. Owning physical property such as land or buildings gives you a tangible asset that can be appreciated over time. When prices go up, your assets can provide you with a hedge against inflation and a potential source of income in the form of rent. Meanwhile, have you ever heard of digital real estate? It is suitable for anyone who don't have huge upfront capital to invest in real estate, but still want to find a way to protect your money during inflation. If you want to explore money-making strategies, click the link in the description to start your financial journey. Precious metals like gold and silver are excellent options for hedging against inflation. Gold and silver tend to retain their value over time, even during times of high inflation, making them an ideal choice of investors looking for long-term protection against economic uncertainty. Investing in stocks is also an excellent way to protect your money during inflation. As companies raise prices due to high costs, their stock prices also rise. The higher stock prices mean that while you may pay more for goods and services, your investments can also increase in value. Investing in these types of assets can protect your money during inflation and enjoy the benefits of increased returns on your investment. While it's always important to diversify your portfolio and keep an eye on the markets, these assets can be a great way to safeguard your finances during uncertain economic times. Number two, diversify your investments. Diversifying your investments can help you spread the risk and protect your money during inflation. First and foremost, diversifying your investments is one of the best ways to protect your money during inflation. Investing in different investments such as stocks, bonds, and real estate allows you to spread the risk and minimize potential losses due to inflation. Additionally, consider investing in commodities like gold, silver, and oil, which tend to do better than other investments during times of high inflation. Number 3, invest in bonds. Investing in bonds is among the most effective methods. Bonds are a security that pays a fixed interest rate over a specified time. Bonds can provide stability in times of high inflation and can effectively preserve your capital while still earning some income. By investing in bonds, you can ensure that your investment income will remain relatively stable even if the purchasing power of your money decreases due to inflation. This can provide peace of mind and help weather any economic downturns or unexpected inflationary spikes. When investing in bonds, it is essential to remember that the longer the bond term, the more vulnerable it is to interest rates and inflation changes. Therefore, you must diversify your investments by investing in short-term and long-term bonds. This way, you can ensure that you will benefit from shorter-term bond returns while minimizing your risk exposure to longer-term bonds. Bonds are also a great way to diversify your portfolio and reduce overall risk. Investing in different types of bonds, such as corporate, municipal, and treasury bonds, can reduce the risk you take with each bond. Additionally, you can use bonds to hedge against inflation by investing in inflation-indexed bonds. These bonds are linked to an index and are designed to increase with inflation. Investing in bonds is one of the best strategies for protecting your money during periods of high inflation. Not only do bonds offer protection from falling prices due to inflation, but they also offer steady income and diversification benefits. As with any investment strategy, it is essential to conduct thorough research and understand the risks before investing in any particular bond. With some research and planning, you can confidently navigate an uncertain economic environment and protect your money from inflation. Number 4, avoid high interest debt. If you are careful, inflation can positively impact your financial health. In times of rising inflation, avoiding high interest debt is one of the best strategies to preserve your finances. High interest debt is any form of borrowing with a much higher interest rate than the current market rate. This means the money you pay back on the loan will be significantly higher than the borrowed amount. The problem with high interest debt is that it can quickly erode your financial security, as the extra money you pay in interest compounds over time. For example, if you have a high interest debt of $5,000 at a 20% of interest rate and only make minimum payments, after 2 years you will have paid a total of $9,188. That's nearly twice what you borrowed. In addition, the interest payments you make reduce the amount of money you have available to spend or save. This can make it challenging to achieve your financial goals, such as buying a home, saving for retirement, or funding your children's college education. Therefore, it is essential to avoid taking on high interest debt whenever possible. Before taking out a loan, looking around for the best rates and terms is crucial to guarantee you will get the best deal available. If you already have high interest debt, consider consolidating it into one lower interest loan or negotiating with your lender to get a lower rate. It is also essential to pay more than the minimum balance each month and pay off the debt as quickly as possible. Doing this will help you save money in the long run and ensure that your money is better protected during inflation. Number 5, review your budget regularly. Keeping a close eye on your spending can help you identify areas where you can cut back and free up more money to put into savings or investments. By doing so, you can better prioritize your spending and ensure you are putting your money where you will do the best. Now, if you're still watching this video, here is a bonus as I've mentioned at the beginning. Are you ready? If yes, then make sure you hit the subscribe button and let's go. Here is a bonus. Seek professional advice. Consider speaking with a financial professional to assist you in navigating the difficult economic situation and making the best financial decisions. They can help you find the right investment strategies and ensure you are on track to meet your financial goals. Finally, if you want to discover how to make money online to earn more income, feel free to click the links down below now. If you want to know more about the inflation, check out this playlist to discover more. Thanks for watching, and I will see you in the next video.